It's time for the 360 round, all about electric vehicles. And today, we're diving deep into the industry's biggest players. We've seen reports, and more are coming out soon, and let's be real. Tesla is always making headlines. As the undisputed leader in the electric vehicle, EV space, Tesla has more than just vehicles to focus on. They've got to prove they're more than just a car company. They've got to convince the market that they are, in fact, a tech company. The only way to do that is through innovation, and on October 10th, when Tesla rolls out the next version of full self-driving, we'll get a glimpse of just how serious they are. I'm optimistic about their ability to pull this off, but let's see what happens. The big challenge, however, is that Tesla isn't the only one in the race. Companies like Rivian and Lucid are scrambling through some pretty turbulent waters. And while Tesla continues to innovate and dominate the EV world, these competitors are struggling to stay afloat. In this episode, we'll take a closer look at the struggles these companies are facing, the strategies they're using to survive, and why Tesla is still the company to watch in the rapidly evolving EV industry. Tesla continues to absolutely crush it in the EV market, leading the charge and showing everyone how it's done. On the flip side, we've got Lucid Motors, who are bleeding cash, almost $1 billion every 3 months. That's a whole lot of money disappearing down the drain, and the company is scrambling to stay afloat. Moving on to Rivian, things aren't looking too bright either. They're relying on Volkswagen to bail them out with a cool $1 billion. Despite the tough times, Rivian still has a fighting chance to stick around. They got some big names backing them up, but let's be real, it's like the little brother always asking for an allowance. Volkswagen just joined the club of Rivian backers, but that doesn't really put Rivian in a strong spot. It's like they're not holding the reins anymore, which means they might have to make some tough compromises. With a cash position that's not looking too hot and having to face a titan like Tesla, it's a steep hill to climb. Rivian and Lucid are under a lot of pressure to perform, but only time will tell how this underdog story turns out. Rivian and Lucid are deep in the trenches dealing with significant challenges, which starkly contrasts with Tesla's current stronghold in the EV market. Let's break down the issues they're facing and see how Tesla might benefit from these developments. Lucid Motors, despite substantial backing from investors, is in a tight spot. They're hemorrhaging about $2.5 billion annually, and with a production output of only 2,400 cars in the second quarter, the math just doesn't add up for profitability. To turn things around, Lucid needs to massively accelerate their production race. But scaling up isn't as simple as flipping a switch. It takes time, resources, and stable operational processes, which they are clearly struggling with. Additionally, Lucid's credibility took a serious hit when they had to drastically reduce their forecast for vehicle deliveries. Originally, they had set a lofty goal of 90,000 vehicles by 2024, but now they've reined it back to just 9,000. This severe adjustment raises red flags about their capacity to meet targets and could shake investor confidence, further casting doubts on their stability and long-term viability. Switching gears to Rivian, they're grappling with their own set of challenges, mainly revolving around high production costs. Each Rivian vehicle costs significantly more to produce than planned, which is putting a strain on their finances. However, there's a silver lining. With the recent approval of a multi-billion-dollar deal with Volkswagen, Rivian could get some much-needed capital and expertise injected into their operations. This deal might just be what Rivian needs to optimize their production process and reduce costs. Now, looking at how Tesla benefits from all this turmoil, Tesla has already scaled production efficiently and continues to innovate in both product development and cost management. With Rivian and Lucid struggling, Tesla faces less immediate competitive pressure, allowing them to further entrench their market leadership. Potential and existing customers might view Tesla as a more reliable choice compared to companies like Lucid, who are slashing production forecasts, or Rivian, who are battling cost issues. Tesla's established reputation for meeting production goals and delivering high-quality vehicles consistently could attract investors and customers who are losing faith in the newer entrants. This could also lead to better terms with suppliers and more favorable market conditions, as Tesla could capitalize on the missteps of others to negotiate better deals or attract talent from these companies. Rivian's journey in the electric vehicle market is proving to be a steep climb, especially when standing in the shadow of Tesla, a veteran in the space. Tesla, after more than a decade of refinement and growth, has set a high benchmark in the industry. Rivian, still in the earlier stages, has a long road ahead to match the scale of Tesla's operations. Achieving this scale isn't just about pumping out more vehicles. It's about doing so efficiently and cost-effectively, which are hurdles Rivian is currently struggling to overcome. Moreover, with Tesla not resting on its laurels and pushing forward with new manufacturing technologies, Rivian has to not only catch up but also innovate alongside a giant that continues to move the goalposts. Now let's turn the spotlight onto Tesla. Their dominance in the electric vehicle sector is well documented, but it's their forward-looking initiatives that are really catching everyone's eye. Tesla is not just stopping at electric vehicles. They're aggressively pushing towards autonomy and even branching into the development of humanoid robots. This isn't just an expansion of their product line. It's a potential revolution in how we interact with technology on a daily basis. The challenges Rivian and Lucid are facing also stir up discussions about their future, including speculations about potential acquisitions if they fail to stabilize and scale their operations. They might become attractive targets for acquisition, not necessarily by Tesla, but by other companies wanting to quickly bolster their footprint in the EV market. For Tesla, these struggles among the newcomers could serve as opportunities. Tesla's advancements in autonomous technology and their exploration into humanoid robots position them as more than just an automotive company. They're morphing into a tech powerhouse. As Rivian and Lucid navigate their turbulent phases, Tesla's continuous push on innovation fronts could widen the gap even further, solidifying their lead in the industry. The journey of Tesla's Cybertruck, from concept to production, is a tale of innovation mixed with patience. The slow ramp-up of the Cybertruck was anticipated largely because it's not just another model rolling off Tesla's existing lines. This truck is a beast of its own, introducing breakthroughs like steer-by-wire and a higher voltage system. These aren't just incremental upgrades. They're foundational changes that redefine how the vehicle operates, necessitating a cautious and deliberate approach to production. Adding to the buzz, the Cybertruck has been making waves online, with viral videos showcasing its unique features and robust performance. When influential figures like Tucker Carlson and Donald Trump give their stamp of approval, you know the vehicle isn't just turning heads on the road, but is also making a splash in popular culture. This kind of endorsement amplifies the excitement and widens the audience, reaching beyond just tech enthusiasts or automotive fans to a broader public fascinated by innovation. Switching gears to Tesla's broader landscape, the brand's popularity continues to skyrocket, underscored by the global clamor for products like the Cybertruck, which has become a symbol of status and innovation among celebrities and tech giants alike. This widespread demand is a testament to Tesla's deep influence in market penetration. However, with great popularity comes great scrutiny. Tesla is now under the microscope, tasked with proving that their innovations can meet rigorous safety and regulatory standards. Every new feature and technology introduced, especially those as radical as those in the Cybertruck, must pass through the gauntlet of regulatory approvals, which can be as challenging as the technical development itself. Rivian's journey in the electric vehicle market is marked by notable struggles, particularly in achieving profitability. Despite having a dedicated lineup, including the R1T, R1S, and a delivery van, they're facing a staggering loss of $440,000 per car sold. This financial bleed is a significant hurdle, casting doubt on Rivian's ability to become profitable in the near future. In contrast, Tesla is on a completely different trajectory, with predictions of surprising the market with swift regulatory approvals and a soaring stock price. Tesla continues to cement its position as the leader in the EV industry. Meanwhile, the situation for Lucid isn't much brighter than Rivian's. Both companies are struggling to stabilize and achieve profitability. The phrase that they may need a miracle to survive isn't far from the truth as both companies battle against a tide of financial and operational challenges. The stark reality of their circumstances makes Tesla's success even more pronounced. Tesla isn't just surviving, it's thriving, expanding its market dominance, and setting benchmarks that others in the industry are struggling to meet. While Rivian and Lucid are searching for strategies to simply survive, Tesla is actively exploring new horizons and cementing its place as the industry leader. This scenario highlights not just the challenges of entering the EV market, but also the immense disparities in outcomes between industry pioneers and newcomers trying to follow in their footsteps.